How's it going, everyone? This is Daniel. In this video, we are going to be talking about Tesla stock. We had a pretty massive day today. Tesla stock is up more than 4%. Also, the overall stock market is exploding to the upside. So we're going to talk about exactly why this happened. We are going to be going over a summary of what Jerome Powell had to say on the press conference, and also talk about exactly what to expect for Tesla stock. Can we potentially get to $1,000 by the end of this week? So we're going to talk about it in this video coming up. As you can see over here, we have Tesla stock today sitting at $952.62, up 4.77% to the upside. We talked about on yesterday's video that we are expecting extreme volatility in spite of the FOMC meeting and rate hikes that was taking place today. The Fed increased interest rates by 50 basis points, and during that time we were expecting extreme volatility, and we talked about we could potentially see Tesla going up to 950, or if the stock market is selling off because of what the Fed had to say, we might see Tesla dropping to 850. We actually broke out to the upside, which is fantastic. And as you can see, at one point at the beginning of the day, we actually went below $900. We're hovering between $890 to $880, and we slowly started to go up. And then once the press conference started to hit, we actually exploded to the upside. So later on, we're going to go talk about exactly what the Fed had to say, what Jerome Powell had to say in a summary video. But as you can see too, with the overall stock market, almost all stocks in the stock market went up today. Every sector turned green. Apple up, Microsoft, Google, Amazon, Tesla 5%. Literally every sector in the stock market climbed up higher. This is mainly because the Fed talked about they don't have any plans of raising interest rates aggressively in the future. The view was they could potentially come out and say that next time they could increase interest rates by 75 basis points. So that is a little bit aggressive. So when Jerome Powell stated that they don't have any plans of doing that, we had a pretty significant rally across the board, and we might see a potential continuation tomorrow. So later on, we're going to talk about Tesla stock in detail and what to expect. So one of the important things that we talked about also on yesterday's video is that Tesla is planning to increase the output of vehicles that's being produced in Shanghai Gigafactory to convert it for a potential the world's largest vehicle export hub. And we didn't talk about that. They're actually planning to build a new factory over there too. So I just wanted to keep you updated on that. So when this fully takes place, Shanghai Gigafactory could potentially be producing 1 million vehicles every year. So that's going to be phenomenal for Tesla. So another important news to look at, of course, is that Austin Mayor came out and stated that if Elon Musk is successful with acquiring Twitter, they're more than welcome to change Twitter's headquarters from San Francisco to Austin, where Tesla Gigafactory is located. So he's basically inviting Elon Musk to change the headquarters from California to Texas. They're probably going to move them to Texas. So this could potentially happen pretty soon once the deal is finalized. So now let's go over and look at exactly why the stock market rallied to the upside. So we're going to go over and watch a video summary of exactly what happened, what the Fed had to say, a fantastic summary, and then I'm going to come back. We're going to be talking about the Tesla stock prediction for tomorrow.
Very busy press conference that just unfolded. One of these situations where the statement didn't really yield all that much. That was surprising, but the press conferences where we heard the commentary, the Fed chairman saying that the Federal Reserve will make appropriate monetary policy in this uncertain environment. And we know that the policy statement added China as a risk to the economic outlook. That is because of the COVID-related shutdowns, because of the zero COVID policy in the world's second largest economy. The Fed chairman saying, though, with regards to inflation, we know that inflation is at yearly pacing at levels we haven't seen since the early 1980s. But the Fed chairman said that he does not expect or does not see a wage price spiral, at least for right now. Translation, things likely aren't to get up to speed to the double-digit inflation that we saw in the late 1970s, early 1980s. Of course, history will bear that out in the next couple months or perhaps years. But what was interesting was whether or not the Fed chairman was going to take even more aggressive moves off the table in future meetings. Obviously, that 50 basis point move today was the most aggressive single meeting move that we've seen since May of 2000. The Fed chairman asked if perhaps a 75 basis point move could be on the table. Take a listen to what he said earlier.
75 basis point in an increase is not something the committee is actively considering. What we are doing is we raised 50 basis points today, and we've said that, again, assuming that economic and financial conditions evolve in ways that are consistent with our expectations, there's a broad sense on the committee that additional 50 basis increases should be on 50 basis point increases should be on the table for the next couple of meetings. So we're going to make those decisions at the meetings, of course, and we'll be paying close attention to the incoming data.
So the Fed chairman laying out pretty clearly, at least right there, that a 75 basis point move is not going to be on the table, at least in the near term. Instead, it's going to be a 50 basis point, that half point move, that will be on the table in the, quote, next couple of meetings. Keep in mind that would be in June and then in July. Now, obviously, a lot of concerns over what the inflationary picture is going to look like at that point. But again, the Fed chairman saying that the economy looks poised to be able to handle and absorb those interest rate hikes. Now, of course, the next meeting is going to be in another 6 weeks from now, and a lot could change between now and then, guys.
Hey, Brian, what did you make of the tone of the meeting? Because when we started this, or when Jay Powell started this, he started the presser by saying, I want to speak directly to the American people. He's saying that the FOMC is acutely aware that high inflation means hardship. This isn't necessarily the way that these things typically kick off.
No, and that's an important point that you bring up. We hear the Fed chairman usually begin these press conferences by saying the Federal Reserve is paying attention and is, attentive to the American experience in the economy. But he doesn't start off with the literal words, I would like to speak to the American people. And that caught a lot of attention. It underscores just how severe the inflationary picture is in the United States. It's no surprise that Americans are feeling this, especially those on the lower wage, in many cases also minority households. Now, the Fed chairman was saying, look, we're going to do whatever we can to try to use our blunt tools to make sure that we can take inflation back down. And that led to a number of questions in the last hour over how the Fed chairman plans on doing that. And I had the chance to ask the Fed chairman about the Volcker experience, obviously referring to the Paul Volcker-led Fed of the late 1970s, early 1980s, when he dramatically raised interest rates to tamp down on runaway inflation. Now, yes, it was successful in taking inflation back down, but also came with a lot of pain because higher borrowing costs really abruptly ended American consumption and business investment, things that rely on borrowing. And when it comes to the lived experiences that were had through that time, it was definitely not fun, although it did ultimately achieve that outcome. But the Fed chairman saying, quote, there may be some pain associated with getting back to 2% inflation, but said ultimately the bigger pain is not dealing with the inflation that we're facing now. So a bit of a tightrope that the Federal Reserve is walking.
Brian, it's exactly what I wanted to ask you about, because Michael Cox, who we're going to get back to in a moment, former chief economist of the Dallas Fed, said there's too much Paul Volcker admiration and not enough emulation. Is that the consensus you're hearing out there, that he's not emulating Volcker enough?
Well, I mean, there could be an argument that he doesn't want to do exactly what Paul Volcker was doing because that triggered a recession. That's why they call it in the economic textbooks a Volcker shock. The idea is that the Federal Reserve feels like in this case, in this scenario, that's what the Fed chairman was saying over the last hour, they feel confident they can get a soft, or as the Fed chairman just said, a soft-ish landing. What that would imply is that the Fed could slowly ratchet interest rates up in increments of 25, in increments of 50, remains to be seen if it's going to be in increments larger than that, to eventually take the economy to a place where growth will certainly be lower than trend in 2021 because that was an extraordinary circumstance post-pandemic. Unemployment rate could indeed go higher, but hopefully not at levels that would be at the double digits that we certainly saw in the 1980s, the early 1980s. Obviously, this is very ambitious. This is in many ways perhaps a bit aspirational, but the Federal Reserve is saying, look, at this time we have some market confidence because you could see in market pricing that there's not quite expectations of inflation running away, at least right now, that they can pull this off. But of course, history will have to bear that out, and that makes the next few months and next few years very critical.
As you can see right here, we have Tesla sitting at $952. Yesterday video we talked about we can see Tesla potentially trading at $950 or $850. We have the overall stock market that exploded to the upside. As you can see, we actually aggressively went up. So we can have a continuation tomorrow and on Friday. So if you push up with the same momentum, we can actually be sitting above $1,000 pretty soon with Tesla. So we're expecting at least 1 to 2% move on Tesla. We got a 4% move. And if we continue at least with 1% move to the upside, we could potentially get to $1,000 and have a breakout. So, but of course, I'd love to hear your opinion. What do you think about the Fed raising interest rates? Are they going to be able to control inflation by not causing the economy to go into a recession? I'd love to hear your opinion. Drop in the comment section below. And if you're new to the channel, make sure you subscribe, turn on notification bell. If you want free stocks, so check out the links in the description box below. But I'll catch you guys on another video. Have a wonderful day.